In today's market update, I'm going to be discussing the progress that the S&P 500 has made since our previous market update on the 13th of June. And I hope to highlight some of the ways in which understanding what the Hurst cycles are doing in the market can give you some great insight in terms of what to expect. My name is David Hickson. Today is the 21st of June 2019, and as always I must ask you to please make sure that you have read and understood these disclaimers. So let's take a look at what has been happening in the S&P 500. I'm not going to repeat what I've said in previous market updates as much as possible. So if you haven't seen the previous market updates, please take a look at the description under this video, in which I will include links to those previous market updates so that you can catch up with what we've been discussing. Here is the analysis that we've been looking at, with, of course, the 20-week cycle trough on the 3rd of June. So let's take a look at what has been happening since then. Let's zoom in and take a look at the price action. As I discussed in the previous market update, we are looking at the way in which price has been interacting with this 20-day FLD, which is this purple line over here. And the first interaction that follows a trough of at least 80-day magnitude, there is the 80-day cycle trough marker. The first interaction is an A category interaction, and because of the way that price interacts with that FLD, we are able to generate a target, which I did in the previous video. And that target, which wasn't a perfectly exactly calculated target, it was an approximate target, but it was at a level of 29.31, and that level of 29.31 was reached, as you can see here, on Tuesday the 18th of June. So what does it mean, first of all, when price reaches a target? Well, what it means is that that cycle move that we have been tracking has completed. It has been fulfilled. Its destination has been achieved, if you like. So what is the cycle move that we are actually tracking? Well, because we are looking at interaction between price and the 20-day FLD, we are in fact looking at the first 20-day cycle move up from this trough on the 3rd of June. So the 20-day cycle is expected to push price up. Then the 20-day cycle is expected to pull price down again into the first 20-day cycle trough. So because our signal cycle, the line that we are looking at on the chart, is the 20-day cycle FLD, that A category interaction is giving us a target for the first move up of this 20-day cycle. When price achieves a target, it provides us with very useful information. If the market is completely balanced, in other words, it isn't very bullish or very bearish, then we would expect the target to be achieved with some accuracy, and then price will turn down and complete the second part of the cycle move, which is the move back down to the 20-day FLD. If price does not achieve the target, which was a possibility that we discussed in our previous market update video, where it was possible that that was the highest price that we had seen, if that does not reach the target, or if that price does not reach the target, then it indicates a bearish shift in the market. As I mentioned in the previous market update video, it was way too premature for us to start calling this a bearish market just because the price had not yet reached its target. And of course, the fact that it has reached its target only a few days later and before the market turns down to come into this 20-day cycle trough indicates that the bearishness has not yet revealed itself in this market. This market has not yet turned bearish. The fact that price has in fact exceeded that target by a little bit so far indicates that there is still some bullishness in the market. Now, in these market updates, I've been discussing the bigger picture, and you will know that the market has, of course, been bullish, and we are still expecting it to maintain some of that bullishness. we will continue to act on the presumption that this market is bullish until we find evidence that it has turned bearish. We'll take a look at the peak analysis in a moment to discuss some of the possibilities around what is happening in the peaks, which can help us to understand when the mood of the market might shift. The important thing is that the mood of this market has not yet shifted. It is still indeed a bullish market, and our A category interaction has resulted in price exceeding the target, which was over here. We often see price exceeding the target of an A category interaction because of all the cycles that are pushing upwards. In this case, the 20-week, the 80-day, and the 40-day cycles are all pushing upwards, as well as, of course, the 20-day cycle, which has completed its upward cycle move on fulfillment of that target. So the 20-day cycle is now expected to start pulling the market down. So the next interaction between price and the 20-day FLD is expected to be price coming back to the 20-day FLD. At the time that it reaches the 20-day FLD, we expect that 20-day FLD to provide support for the market. And we expect that to happen at around about the time that the next 20-day cycle trough is expected, which you can see from this nest of lows is centered around about the 23rd or 24th of June. And so we would not be surprised to see price coming back down towards that 20-day FLD early next week. But now everything about using this particular way of applying a Hurst cycles analysis to your understanding of what is happening in the markets has to do with not absolute certainty, but giving you insight in terms of what to expect and what is likely to happen. I should remind you that this interaction between price and the FLD is not actually something that Hurst ever spoke about. It is actually the way that I apply an understanding of a Hurst cycles analysis. In my opinion, it's a very useful and very powerful way of applying your Hurst cycles analysis to help you to gain an insight. So what do I mean by gaining an insight? Well, we are going to watch what happens as price comes down towards this 20-day FLD, because it does need to form that 20-day cycle trough. Of course, there are various possibilities. One possibility, and let me give myself a little more room up at the top of this chart. One possibility is that price continues to rise and then only does a small dip down for that 20-day cycle trough. What would that tell us? That would tell us that the bullishness in this market is still very much alive and well. The other possibility is that the price will turn down and it will find support at the 20-day FLD. Now, that is the most likely outcome, and it's the outcome that we expect to see. And that would tell us that although this market is bullish, it is not excessively bullish at the moment, and it's leaning more towards being a balanced market. The other possibility is that the market will turn down. It'll drop down below this 20-day FLD and form the 20-day cycle trough at a level below the 20-day FLD. That would tell us that, in fact, the bearishness in this market is increasing. So we use the way in which price interacts with the FLD as a constant measure of the bullishness of the market. This market is bullish, and so I am expecting either the bullish alternative or the neutral alternative to play out. The bearish alternative is not expected at this time, but if that does happen, then we will sit up and take notice and say, well, this market is beginning to show signs of turning bearish. But the important point here is that what we are expecting next is for the 20-day cycle to pull the market down to form the 20-day cycle trough. Now, while we're taking a look at this chart, let me show you another FLD. You should know, of course, that there is an FLD for every single one of the cycles that we find in the cycle analysis that we have performed. And here we can see exactly the same thing happening in terms of the interaction between price and the FLD. Following this trough over here, we generated a target which was very roughly over there. It was a target that was achieved and exceeded. So at the 10-day cycle level, we were seeing that bullishness. at around about the time that the 10-day cycle trough was expected, which you can see on this chart, was on about the 13th of June. And there is the price bar. We would expect price to come down to the 10-day FLD, at which point it would find support. So in fact, exactly what I have just explained is what we are expecting in terms of price interacting with the 20-day FLD, is exactly what we saw happening when price interacted with the 10-day FLD. It came down, and at the time that the 10-day cycle formed its trough, which was almost certainly on the 13th of June, it was very close to the 10-day FLD, found approximate support at the level of the 10-day FLD, and then spent the next few days doing what I call tracking along the FLD, whereby the high price of each bar was above the FLD and the low price was below the FLD. Finally, price broke away from the FLD and continued upwards. You can see how the fractal nature of the market reveals itself in terms of the way that it interacts with these different FLDs. What it has just done with the 10-day FLD, it is now expected to do at a slightly larger timescale with the 20-day FLD. And so by constantly tracking and understanding the way in which price is interacting with these FLDs, we are given very powerful insight into what is happening in the markets. So let's just zoom out and discuss for a moment what is happening with the peaks. First of all, looking only at the trough analysis, why do we expect this market to be bullish? Well, there was a very big magnitude trough on the 24th of December 2018, and that was a trough of at least 18-month magnitude. There might have been longer cycles that formed a trough at that point, but I believe it was a trough of at least 18-month magnitude, which means that the 18-month cycle is currently pushing upwards. So that's giving us an upwards pressure, a bullish pressure. The 40-week cycle would, at around about the time of the 20-week cycle, be turning down. Some people would count that as still being level because it's in the process of topping and turning down. Others would count it as a negative. I'm going to count it as a negative for now. Then the 20-week cycle has, of course, just formed a trough, and so it is pushing upwards. So is the 80-day cycle, and so is the 40-day cycle. And so what we do is calculate what is called the underlying trend for the 20-day cycle, which is simply the summation of all of the longer cycle pressures or influences. And so when we add up that simple column of integers, we get a value of +3. +3 indicates that it is bullish, 0 would be a neutral market, and a negative number would be bearish. So for that reason, based only on the trough analysis, we believe that we still have a bullish market. Now let's take a quick look at the peak analysis. As I say in almost every one of these market update videos, the peak analysis is less reliable because this is a stock market, and the cycles we know are synchronized at their troughs and not at their peaks. You will notice that there has been a change since the previous market update in terms of the magnitude of this peak at the end of April. In the previous market update, it was a peak of I think it was 40 weeks. You will often find this kind of thing happening, particularly in the peak analysis, because as mentioned, it's a less reliable analysis. And because peaks are not synchronized, the magnitude of those peaks will sometimes shift. The reason why this peak has shifted is because of the recent strong up move. And so you can see that the 40-day cycle peak that we were heading up towards in the previous market update has indeed formed, according to this analysis. And so we have seen that 40-day cycle peak. And the next really big peak is expected to be this 18-month cycle peak. So in terms of when we might expect this market to turn bearish, certainly when that big 18-month cycle peak forms, that would be a time to take care and take notice and start asking ourselves whether we're beginning to see some bearish pressure. So that is expected sometime in July, as you can see. However, being a peak analysis, it's a bit of a scruffy peak analysis, which is often the case, and so the exact time at which that peak is expected is likely to change. We shouldn't put too much focus onto that. Nevertheless, we do at the moment still have a bullish market, And of course, we will in the future be looking for further signs of some bearishness developing, but that time has not arrived yet. I do hope that you found this market update interesting and useful. Please let me know if you have any questions, put them in the comments below this video, or send us an email, info@sentienttrader or info@hurstcycles.com.